Hey everyone, welcome back to Corporate Decoder. Today we're digging into Enlivex Therapeutics and what their latest filing reveals about their journey. Maybe we'll find some groundbreaking discoveries or maybe just some of the usual corporate drama, so stick around to find out. Alright folks, so Enlivex Therapeutic Limited has put out their latest report of Form 6K, which for us means a peek at how they're doing. Think of this like a quick health checkup for the company over the past few months. They're based in Israel, and this is a regular update, keeping the US Securities and Exchange Commission in the loop. And right off the bat, they're telling us they file annual reports using Form 20F, which is the standard for most foreign companies listing in the US. This little box checked here just confirms that. Now the juicy part, the actual numbers. Enlivex has shared their unaudited, condensed, consolidated financial statements for the periods ending June 30th of 2025 and 2024. This is crucial because it shows us how their money is flowing, not just their total income, but also how much they're spending and where they stand financially. It's the raw data that tells the real story behind the press releases. They've also provided an operating and financial review and prospects. This is basically management's explanation of the numbers, what's driving their results, and what they expect in the future. It's like getting the footnotes to the financial story. They've incorporated these into several of their registration statements, which are essentially documents they filed to allow them to sell their stock. And you see a bunch of other exhibit numbers here like 101, 101, CH, and others. These are all related to something called inline XBRL. Think of it as a modern way to present financial data, making it more readable by computers and hopefully by us too. It's basically making their financial reports more digital friendly for analysis. Then we have the signatures. This is where the company's top brass officially signs off on the report, attesting that everything in it is true and accurate to the best of their knowledge. And here we see the signature of Oren Hershkovitz, who is the Chief Executive Officer. This is a standard part of the filing, confirming that the report has been officially approved by the company leadership. He's signing off on these financial statements as of August 29th, 2025. Now let's look at the actual financial health of Enlivex. This filing isn't giving us a full income statement in this specific 6K document itself, but rather it's referencing those detailed financial statements as Exhibit 99.1. Imagine, if you will, that we're opening that exhibit to see the nitty-gritty. We're looking for trends and significant changes. For instance, we'd want to see how their cash balance has changed, if their revenues are growing or shrinking, and how they're managing their expenses. Are they investing heavily in research and development, which is common for biotech companies? Are they seeing improvements in their clinical trials that could lead to future revenue? Every number tells a part of that story. For a company in the biotech or therapeutic space, financial stability and growth are obviously key. Others want to see a clear path to profitability, and sometimes that involves significant upfront investment and a period of losses before a product or treatment is successful. So when we look at these financials, we're trying to understand that journey. For example, if their research and development expenses have increased significantly, say by 30%, it tells us they are doubling down on innovation, possibly a new drug or therapy. But if their revenue hasn't kept pace, that could be a concern, signaling that their investments aren't yet paying off. Conversely, if we see solid revenues are unpredictable, let's consider a hypothetical scenario. If Enlivex reported that their operating expenses rose by 15%, but their total revenue only increased by 5%, that would suggest a widening gap between what they're spending and what they're earning. This could mean they need to raise more capital, which can dilute existing shareholders or find ways to control costs more effectively. On the flip side, if they manage to grow revenue by 20% while only increasing expenses by 5%, this would indicate strong operational efficiency and growing profitability. It's these kinds of comparisons that help us understand the true financial health and strategic success of the company. Looking at the operating and financial review and prospects, or Exhibit 99.2, is also vital. This is where management will explain any significant events that occurred during the period. For a company like Enlivex, it could be updates on clinical trials results from studies, positive or negative, or any strategic partnerships they've entered into. They might discuss market trends that affect their business or any regulatory hurdles they're facing. Understanding these qualitative factors, along with the hard financial numbers, gives us a more complete picture. For instance, if they mention facing delays in a crucial clinical trial, that could have a substantial negative impact on their future revenue streams and stock price. Conversely, if they announce a breakthrough in their research or a successful partnership with a larger pharmaceutical company, that could be a major catalyst for growth. Now let's think about the bigger picture for Enlivex. As a therapeutics company, their success is heavily tied to the effectiveness and approval of their products. That means clinical trial data is paramount. If their financial reports coincide with positive trial results, it's a powerful combination. If the financial filings show them burning through cash rapidly without clear progress in their pipeline, that's a red flag investors need to be aware of. External factors like the overall health of the pharmaceutical market, the competitive landscape, and regulatory changes also play a huge role. Enlivex operates in a highly competitive and regulated industry, where innovation and scientific validation are filings show them burning through cash rapidly, without clear progress in their pipeline. That's a red flag investors need to be aware of. External factors like the overall health of the pharmaceutical market, the competitive landscape, and regulatory changes also play a huge role. Enlivex operates in a highly competitive and regulated industry where innovation and scientific validation are highly competitive, and regulated industry where innovation and scientific validation. So what's the overall assessment of Enlivex based on this type of filing? We need to see actual numbers to give a definitive opinion, but generally we look for sustainable revenue growth, strong cash flow, and efficient management of expenses. We also assess their pipeline and the progress of their products. The risks are typically related to clinical trial failures, regulatory challenges, and competition. Opportunities lie in successful product development, market expansion, and strategic partnerships. Without the specific figures from exhibits 99.1 and 99.2, we can only discuss the framework of what we would analyze. However, the fact that they are filing these updates regularly signifies their commitment to transparency with investors. Alright, that's our quick decoder of this Enlivex Therapeutics filing. While we didn't get to dive into the specific numbers in this broadcast, you now know exactly what to look for in their detailed financial exhibits. What's your take on the importance of these regular regulatory filings for biotech firms like Enlivex? Let us know your thoughts in the comments below. If you found this breakdown helpful, give us a thumbs up and subscribe for more in-depth corporate analysis. Also, don't forget to join our Discord community for more discussions and insights. It's linked in the description. Thanks for watching, and we'll see you on the next Decode.